While I try to discourage short-term trading, the earnings calendar simply wasn't in favor of the bears, as no stinkers reported. In this CNBC Investing Club, we teach you that one of the most important elements of managing your own money is getting a great cost basis. This is not talked about much at all. The average price you paid for your stock. Most of the problems I see in investing often stem from getting a bad basis, buying too high, which regularly leads for many people to selling too low. I want to produce the opposite results, which is why I'm always preaching about the need for discipline. Earnings won't be perfect. People found fault in McCormick today, and at one point Lulu tonight. But the stock of Adobe got crushed last week on its quarter, and have you noticed that it's now higher than when it reported the so-called awful quarter that I told you I liked? Which leads me to one more giant grievance that I have against those who scared you into selling near the lows or kept you on the sidelines. Not only did they rely on Fed speak as well as doom and gloom talk, they even became selective chartists. At the worst moments, they put out the fabled death cross pattern, where the short-term 50-day moves above the average of 200. Another thing that's not a good sign, but the name sounds so much worse than the reality, death cross. I mean, who doesn't want to talk about that? Now, this death cross came at the exact time when Larry Williams, who's a historian, told me that if the S&P can bounce authoritatively, in other words, that a 50% retracement of the previous decline, if we got that, then the market would be off to the races. He pointed out that we've seen this pattern 21 times since 1929. 21 out of 21. It's produced a longer-term rally than everybody thought. Now it's looking like 22. Plus, we had that oscillator I used, the one from Standard & Poor's, in extremely oversold levels. I have a doctrinaire approach to this indicator when it's too negative. You have to hold your nose and buy something because it means the market's a coiled spring. We've got an incredibly negative reading at the bottom, and it turned out to be an incredible buying opportunity. Unfortunately, that same oscillator hit a very positive number today. You should check my Investing Club morning meeting that I do with Jeff Marks if you want to know more. My discipline says it's time to pull in your horns a bit, especially after just the completely insane amount of speculative buying we saw today. We've been scaling back a bit for the Charitable Trust, although we still want to buy some stocks after the oscillator settles down. But we're chiefly interested in the oils and the agricultural names, which have been hit by Putin's promises. The bottom line, when I was a little boy, I saw this wonderful Broadway show, Promises, Promises, with the late Jory Orbach. You may remember him from Law & Order. Unlike Broadway's promises and promises, Putin's promises are made to be broken.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.